Welcome. My name is Van Richards. I'm a chartered financial consultant, and today we're talking about a really interesting company. We're talking about a company that helps people grow marijuana. Well, that might sound I don't know. For some people, it sounds like an interesting subject. For some, maybe not. But this is a really interesting company. It's an interesting take on the legal cannabis growth aspects in our economy right now. So let's go ahead and begin on with the daily stock analysis. The company that we're going to be talking about today is really interesting. On a serious note, the idea behind cannabis has been around for a long time. In the 90s, actually, I believe it was around 1996, California was really the first state that passed a law about legalizing the use of marijuana for medical purposes. I believe it was called the Compassionate Care Act. And there have been several other states that have passed that law as well. Now, the idea behind the company that we're talking about today, which is Innovative Industrial Properties, is what they do is they manage properties where this business operates, essentially. So let's go ahead and begin talking about a little bit more detail. We want to look at what the possibilities are financially going forward, look at some of the history of it, and then basically take it from there. But the first thing that I want to do is remind you that today's program is brought to you by Richards Financial Planning. If you're getting into the new year and you're frustrated with your finances, go over to richardsfinancialplanning.com and learn about the prosperous planning process. I think it's something that you'll be well rewarded by. Okay, the company that we're going to talk about today, Innovative Industrial Properties. Let's make the screen just a little bit bigger for those of you who are actually watching. And for those that you are listening, I'll kind of narrate and give you a little bit of information about what you're seeing today or what we're seeing and you're listening to. The company really, it has real estate that focuses on a concept called sale leaseback. There's 63 properties in 16 states. The average lease is about 16 years. They're well leased. Their revenues are extremely good, but it's a small company. It's a small company. It's actually considered a REIT, or a real estate investment trust. There are many properties. As I mentioned previously, there are 63 properties currently in the portfolio that are throughout about 16 states. The average lease size that is utilized inside of the portfolio is about 16.1 years. And they're about 99% leased on their space. So it's actually, a lot of times when I talk about an investment, from an analyst standpoint, I naturally take a pessimistic view. And today, you may think that I'm sounding overly enthusiastic about this. And I'm not trying to sell you on anything. I'm trying to educate you on what this company does. It just so happens that they have some excellent financials. And I want to thank one of our listeners, one of our viewers who brought this to my attention. I'll remind you that if you've got a stock that you'd like to learn a little bit more about, let me know about it in the comments, and I'll try to see what I can do about helping teach all of you a little bit more about the possibilities of what the company has. Now, when we look at companies and we analyze them, we use what I call SEC. SEC is a real simple concept. We look at the stability of the investment, the earnings, and then the competitiveness. So the very first thing that we do when we start looking at the stability of the company, we want to know how good are they going forward. We look at a concept that's called a moat. Now, the idea behind the moat has been popularized by Warren Buffett. And his idea is that moat is that invisible barrier that is in between the company and their competitors. Now, in reality, when we look at what goes on with Innovative Industrial Properties, it can be viewed as not that different than a lot of other REITs that are out there. But when we look more specifically at the customers that they utilize with the people, the tenants that they have, that really makes the difference. Now, I classify them as having a narrow moat. Now, there are some other analysts out there that might not even say that they have a moat at all, but this is the reason why I think that this company has a narrow moat. This is their superpower. Their superpower is switching cost. Once a tenant utilizes their services, they're signing a contract for 16 years. That's the average lease. The other thing is when Industrial Innovative Properties looks at this, or Innovative Industrial Properties, get that said properly in the right order there, when they're looking for tenants to work with, these are people, these are businesses that are established and have already gone through the regulatory process, which is necessary to either cultivate, sell, or process legal cannabis. So there's some hurdles there, which makes this a switching cost. And actually, that's why I think that this company has a narrow moat. Now, really, the idea behind this company is a sale leaseback strategy. Let me explain briefly how this works as we go on. Basically, what you have is you have a state licensed medical use cannabis operator. And what they do is they have a property which they utilize for whatever purposes that they need, whether it's going to be retail, sales, or cultivation. And they will actually sell their property to Innovative Industrial Properties. And then what Innovative Industrial Properties will do is they will lease the property back to the cannabis company. And if you're looking at the screen, I know those of you who are listening and kind of describe how this works. It's basically you have the cannabis operator sells the property to Innovative Industrial Properties, and then Innovative Industrial Properties leases it back to them. And that's why I really think that there's a narrow moat going on. Now, let's look at actually what's happening financially. Now, I'm gonna forewarn you on this that these are some big numbers. Now, when I say big numbers, yeah, this is a small cap company, but it's had some stupendous growth in the past year. And they've been around for a few years, but in the past year especially, they've done very well. And the big question you want to ask yourself if you're thinking about this as an investment is going to be, what are the possibilities going forward? We can talk about possible regulations and what governments may do or may not do too. But as we look at this, we go back in the full year review, we look at 2019. In 2019, they had $44.67 million in revenue. Now, that is much more than they had in 2018. This is why I'm saying that they've had pretty good growth here in the past year to 2 years. In 2018, they only had $14.79 million in revenue. That is a 202% increase. That's significant for any business in itself. Now, when we break it down quarter by quarter, the first quarter of 2020 was at 21.13. And get this, the second quarter was more. It was 24.35. Remember what that number was in 2018? They've already exceeded it. They've exceeded the first quarter by 15.24%. Then when we go into the third quarter of 2020, it's 34.33 million and it's up 40.99%. Okay, hang on to your hats here, friends, because when you calculate this all out and you compare it to 2019, even though that we are past the fourth quarter of 2020 and those results are still pending, they've already exceeded what went on in 2019 by 786%. And if you're watching this, you're going to see something come up on the screen right now. It's the past performance is no guarantee of future results. Look, I know that this is positive. And if you're looking at this, you may be chomping into bits and thinking, I'm going to buy this stock. But you got to understand that even the best stocks, there's no guarantee about the future performance. You invest at your own risk from that standpoint. Okay, let's look at a couple of different financial ratios. This is significant when we look at smaller companies. Financial ratios tell you the health of the company in itself. And one of the most popular financial ratios is going to be the current ratio. And essentially, it's real simple. What you do is you take the current assets of the company and you divide it by the current liabilities, what they have divided by what they owe. So it comes out and it tells us that they had current assets of $612 some million. Now I left a comma and a zero in the wrong place there, but it's $612 million. And if you spell it out, it's $612,250,000. And they have current liabilities of $58,240,000. Now, when you divide that out, if you use your calculator, it comes out to 10.2. I can't even say it today. It comes out to 10.51. I get too excited about my words here. So you might be asking yourself, well, what's the significance of 10.51? Okay. Current ratios, when you look at it from an accounting business standpoint, what you want to do is you want to think of a range of what's good for this particular business. All right. A good ratio is usually in between 1 and 2. But this company has 10.51. Is that good or is it bad? Well, it's actually quite good, because what that tells us is that this company has a very strong balance sheet. Companies with high multiples, especially those that are in double digits, have very good balance sheets. They're financially healthy. Now, the second ratio that we're going to look at today is going to be the debt equity ratio. The debt equity ratio, basically it's how much do they owe versus the shareholder equity value. And when we take those numbers and average them out, it's 0.11. The average real estate debt equity is 0.55. So lower's better, friends. That's exceptionally good. Now, here's one of the better parts about this company. This company has a dividend that it pays of 2.85%. And you know how we love dividends.
The beauty of your side.
And during the musical interlude there, just to emphasize to you all of you out there who you're watching or listening, 2.85% for a dividend is really good. Now, if you're a income investor, this is one that you want to consider. But obviously, you got to remember that past performance is no guarantee of future results. But I will tell you, by looking at the balance sheet numbers and the cash flow of this company, it's really pretty good. 2.85 looks like a number that might be pretty stable going forward. Now, let's look a little bit more at what the earnings are, because remember, we use the SEC strategy. We looked at the stability. Now we're looking more definitively at the earnings. And when we look at what's happened in the past, I throw up a chart here of earnings from 2018. And it's a beautiful chart. It's a chart that goes up. You never want to look at a chart for earnings that's going to have consistent decreases. You want to have one that's consistently increasing. And that's what's happening with this company. When you think about the numbers that I mentioned to you previously, they're triple digits. So they're actually really good. And I harp on this a lot. I hate to sound like a broken record sometimes, friends, but yeah, the past performance is not going to be a guarantee of the future results. Okay, let's look at the actual share price, because we can have earnings, but those of you out there that are interested in growth, you want to know what's happened with this stock. What's the value? If I put $1,000 in, or 100,000 or $1 million, whatever it's going to be, what would it have been worth today? So we go back a year on the 8th in 2020 in January, and the price was $74.47, almost 48 cents. And then when we look at what the price is today, at 177.27, and actually I'm looking over here, it really closed at 178.44. So it's a little bit higher than that, but my goodness, it had a 138% increase in the period of a year. Wow, that's awesome. And there again, I've got to remind you, the past performance is not going to be a guarantee of the future results. But with that note said, I'm going to pause just for a brief moment and talk about our sponsor today, because our sponsor has ironclad guarantees. That's adviceforlifeinsurance.com. Everybody needs life insurance, friends. And You can find the best life insurance at the lowest price in less than 5 minutes at adviceforlifeinsurance.com. Go over and check them out if you need life insurance. All right, now whether we're talking about the happy things, let's go and talk about what the bullish analysts are saying about innovative industrial properties. The bullish advisors, the bullish analysts are saying that this company is stable. The regulatory advantage makes it so that there's a barrier. It's that moat, it's their superpower. The regulatory advantage makes it more difficult for some companies just to pop in. It is easier for a company in the states that allow marijuana to be grown and sold to grow than it is to go through the process for medical cannabis. There's a lot more hurdles that are involved in there. So that's that imaginary barrier that is in their moat. And it's a very good bullish aspect of the company. Another thing is we have to look at it from the standpoint of what we think will happen in states going forward. Legalization of marijuana with more liberal governments, which is basically what a lot of states are heading toward. Look at the past election. We won't talk about that in detail, but they're moving more towards liberal attitudes. And cannabis is going to be one of those companies, one of those types of companies, industries that's going to benefit from it. The legal cannabis and also the legal medical cannabis will benefit from it. So regulation is fueling growth in total. And then this company in itself, when we look at innovative industrial properties, I don't know who the chief financial officer is there, but whoever you are, you deserve an applause. Your company's done extremely well in the past year. The company has extremely good, successful management. Now, no stock has all rosy things going on. We have to think about what possibly could happen that would be on the bad side for this company. Expansion really depends upon regulation on a state-by-state basis. So some states, say, for example, I live in Texas. Texas is more of a conservative state. They may have more barriers for companies to start and grow medical cannabis. When you look at the companies that are out there, and if you were to look at a map, if you went over to Innovative Industrial Properties website, you'd see a map, and there are no properties in the state of Texas. So the properties in the states and the state regulation is going to have a lot to do with the company going forward. Also, the value of the company is highly dependent upon the success of the companies that lease the properties. Yes, they have good histories, but look, friends, bad things happen to good companies. They have 63 companies that's in their portfolio. If they have a few that are failing, it could not be good. So that's one bearish aspect. And then the last thing is there are other REIT competition out there. There's other real estate investment trusts that are out there. Now, what's a fair value of this stock? When we look at the fair value and what companies project, when I say companies, I'm talking about the analyst. I use Morningstar a lot because I think that Morningstar's got a lot of good information, but Morningstar does not have an analyst that's dedicated to innovative industrial property. So what they do is they have an algorithm, a proprietary algorithm, and they plug all the information for the company in the investment that we're talking about. And then that company gets a algorithm number. And the algorithm number for the fair market value for innovative industrial properties is $144.38 per share. And today, when I put it up here previously, it was at $177.31, but it actually closed at $178.44. So we're talking about a company that, if you look at it from the calculating standpoint, the algorithm standpoint, they're about 33% overpriced according to Morningstar. Now, what do some of the other analysts that are out there say about this particular stock? There's really only 5 analysts that cover this company, and really that's pretty good. This is 5 analysts who have offered an opinion on this company in the last 90 days. And for a small company, and yes, $3 billion is a small company. That's more than I've got in my bank account, but that's a small company in relation. We'll talk about other companies in a moment, but 5 analysts is a good number. 3 out of the 5 are actually saying that this company is Yes, sir. They're saying that it's a buy. But you've got two holdouts who are saying that this is a hold. So we have to take that with a grain of salt and say that this is actually a moderate buy according to the analyst. Now, we've talked about the stability. We've talked about the earnings. What about the competitiveness of this company? Well, if you look at the propaganda that Innovative Industrial Properties has on their website, they tout themselves as the only medical cannabis company that specializes in REITs for or real estate investments for the cannabis industry. That's for medical purposes, if I can spit that out. Okay, but that doesn't mean that they've cornered the market on it. That doesn't mean that they're the only company that can do this. They're one of the few that actually specialize. I'll put it that way. They may refer to themselves as the only one, and they may be. But let's look at it from a standpoint of other REITs that are similar in size, and we'll take a look at the big guy on the block and see what that is. Okay, the blue line, we're just looking at a period of a year. Now, what I've done for those of you that are listening to this, either on YouTube or the podcast, I've put up on the screen a spaghetti graph, and the spaghetti graph is basically showing a chart of what's happened on a day-by-day basis from 1 year ago in 2020 until today. And when I look at the 5 companies that I've put on the chart, I've only got one name up here so far, and that's Innovative Industrial Properties. They've done better than anybody. They've done much better than anybody. Hey, 178% in a year. That's really pretty good. The company at $3.93 billion, when we compare it to the big guy on the block, and the big guy on the block is going to be Prologis. Prologis is the largest industrial REIT that exists, and it's at $56.6 billion. They didn't do quite as well in that. And if you're looking at the spaghetti graph, you can see that there's about this much distance in between the two. And when we look at other companies that are similar in size to Innovative Industrial Properties, Alpine Income Property Trust, a trust that's worth about $110 million, they're pretty much down below. They actually are in the negative route for the year. Essential Properties at $2.2 billion, they're negative for the year. And Plymouth Industrial REITs at $368 million are negative for the year also. So the only two that I've shown that are positive for the year are Prologis, which is the big one, and then Innovative Industrial Properties, which is what we're talking about today. So when we talk about a competitive standpoint, Innovative Industrial Properties beats just about every other REIT that's out there. Now, I won't say that it beats every REIT because I haven't looked at every REIT, but when I look at those that are similar to it in size and the largest industrial REIT that exists, Innovative Industrial Properties is definitely on top. So let's look at lastly, let's look and see what the different analysts are saying about this particular stock. And what I have up on this chart now is I have the 1, 2, 3, 4, 5, 6, 7 different companies that have actually issued opinions on this company in the past year. Now, the ones that I talked about earlier only go back 90 days, but I'm going back all the way until November of 2020. When we look at that, the most, let's say, pessimistic analyst out there is a gentleman by the name of Craig Hallman. Mr. Hallman puts a price range at between $125 and $170. Now, today they closed at $178.44. So according to him, they're pretty close to the top of what they should be. He thinks that actually they're over top of what his estimate was, which was given back in November of 2020. Now, the most optimistic analyst out there is actually Piper Sandler. Piper Sandler's range is like, I'll show you if you're watching, my hands are going up and down. It's growing bigger and bigger. When we look at what Piper Sandler's range is, it's in between 160 and 250. It's like, how high is the sky and how low is the ground? 160 to 250, and today at 178.44. Wow, their opinion is that this company's got a lot more possibilities to go going forward. So with that, just kind of to recap of what we talked about today, remember that when we're looking at stocks, we're trying to look at the stability, the earnings, the competitiveness of all of these different stocks. And we're trying to ask ourselves, how do they look as they are going forward? What's going to happen with this company in the future? Okay, look, the properties that they have are pretty stable. They have leases which are more than 16 years. They're 99% leased. They had a 178% increase in stock value in the past year. Their revenues have increased by 202%. It's all positive. I still have to end by telling you that the past performance is no guarantee of future results, but I want to thank the one listener out there that brought this to my attention because, man, you found a diamond in the rough. I think this is a good stock. But you have to make decisions for yourself on what you think is going to happen. And I'm going to show you a disclosure in just a moment as I close. It's going to tell you that you're going to base all this information on what you think is going to be good for you going forward. So with all of that, I'm going to say thanks for watching today. Thanks for listening if you're listening on the podcast. And thanks for watching if you're watching on YouTube, Facebook, or Twitter. And I hope that you all have a really good weekend. And let me know what you think about some stocks. If you're out there and you're listening, enter something in. Go over to YouTube. Let me know what your opinions are. Find me some stocks so that I can help you understand what the company does a little better. Have a great weekend, friends.